Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 22nd of January 2022. And we're publishing our gold and silver weekly update for the week ending the 21st of January, which show both gold and silver prices rising for the week, and silver particularly so. So let's take a look. First, precious metal prices. Gold rose $17 last week, rising from $1,818 to $1,835, having hit a high of $1,848 and a low of $1,806, a rise of just under 1%. In sterling terms, gold finished the week at £1,354, that's up £25, and in euros it closed at 1,617 euros, that's up 25 euros. Silver did much better. Silver rose $1.31, rising from $22.99 to $24.30, having hit a high of $24.71 and a low of $22.82, a rise of 5.7%. In sterling terms, it closed at £17.93. That's up £1 and 12 pence. And in euros, it closed at 21.42 euros. That's up 1.29 euros on the week. The gold to silver ratio fell from 79 to 1 to 75.5 to 1. So we can see that silver at last is beginning to catch up with gold. Bitcoin fell $7,693. This is as of this morning, and currently stands at $35,333. The whole crypto market has been in one dramatic fall these last couple of days. Now looking at equities. The Dow Jones closed on Friday at 34,265. That's down 450 points on the day, and down quite a hefty 1,646 points on the week. The S&P 500 closed at 4,397, down 84 points on the day, and down 265 points on the week. The Nasdaq Composite closed at 13,768, down 385 points on the day, and down 1,125 points on the week, which is a huge fall when you consider that the index is only 13,500 or so to begin with. Now looking at oils, we can see that Brent crude closed at $87.89, that's up $1.83 on the week, and WTI crude closed at $85.14, and that's up $1.32. That's now a rise of around $9.50 for each of those in the past 3 weeks. The dollar index stands at 95.64, and that's up 0.48 on the week. And we're beginning to see a floor in the dollar index of at or around the 95 level, and a ceiling at or close to the 97 level. Of course, that may very well change. Now, we concluded last week's video with the following forecast. So short of any major disaster, we see gold trading between 1775 and 1860, with 1735 and 1880 as outliers, and silver trading between 22 and 2350, with 2150 and 2390 as outliers. We didn't rule out the possibility of $24 silver during our weekly update, but in fairness, silver even outperformed that slightly. So gold traded within our normal range and remained above $1,800 all week, with $42 difference between its high and low. Silver traded within our outlier range until Wednesday, and then really bust through it, closing 40 cents higher than our predicted high. We'll discuss in a moment the reason for this. But first, just a quick reminder that each day we produce a morning update covering news, economic data, and gold and silver prices. So please make sure you've subscribed and pressed the bell sign so you're notified each time one of these videos are published. Now, we're now beginning to see the bullish sentiment that normally starts a new year. And there are also good fundamentals to support such a rise this year other than just hopium. In fact, with numerous countries announcing higher than predicted inflation levels, there is no doubt many are now using gold as a potential hedge. Offset against this, of course, is the prospect of rising interest rates, which normally is bad for gold and silver, but with inflation so high, even rising rates, unless they are severe, which they're unlikely to be, real interest rates, the difference between the general rate and inflation rate, is still likely to remain low, and therefore the normal downward effect on precious metal prices will be delayed until we see the prospect of real rates rising, which could be some time. That said, of course, another consideration is the value of the US dollar, which, although to some extent is predicated on interest rates, is also affected by the dollar's relationship to other currencies, many of which are encountering their own problems. And there is quite a bit of evidence to see monies fleeing to the US dollar, which is why we have a dollar index at 95 and above, and holding. Equity markets, however, have been affected, as we can see by their performance these past few weeks or so, showing that the Dow is now down 4.7% for the month, the S&P is down 7%, and the Nasdaq is down 12% for the month. The economic data during this past week was not particularly encouraging either. On Tuesday, the Empire State Manufacturing Index for January came in at minus 0.7, against a plus 31.9 in December and expectations of a plus 25.5. On Thursday, weekly jobless claims rose from 231,000 to 286,000. And the continuing jobless claims also rose from 1.55 million to 1.64 million. On the positive front, the Philadelphia Fed Manufacturing Index improved from 15.2 in December to 23.2 in January, and building permits and housing starts were also a little higher. But it's this coming week, which has much more data being announced, and which is more than likely going to be even more impactful. Why? Because we have the FOMC announcement. Let's take a look then at what we can expect. On Monday, we have the Market Flash Manufacturing and Services PMIs for January. Tuesday, the Consumer Confidence Index for January. Then on Wednesday, we have Advanced Report on Trading Goods, New Home Sales Starts and Housing Starts all for December. And then we have the FOMC statement on interest rates, and Jerome Powell's news conference thereafter. All eyes will be on this without doubt. Thursday, we have the weekly jobless claims, GDP for quarter 4, durable goods orders and pending home sales index all for December. And then on Friday, quite a plethora of data. Real disposable income, real consumer spending, PCE inflation, core PCE inflation, nominal personal income, and nominal consumer spending all for December, plus the UMich Consumer Sentiment Index for January. So as stated, all eyes will be on the Fed on Wednesday, and markets will be looking at Friday's data in particular as well. So looking at gold for the moment, we saw a reasonable rise last week in spite of higher yields, with US 10-year yields actually rising to a fresh cycle high on Friday. Technically, gold will be looking for support around 1830, resistance at the psychologically important 1850 level, and again at November's peak of 1877. Silver prices have begun their catch-up with gold. For some months, silver has lagged gold primarily because of the concerns on its industrial demand. But it's now clearly catching up, especially since the Silver Institute published its paper anticipating higher silver demand towards the end of last year, and about which we produced a video. From a technical point of view, we can see silver consolidating near the 200-day moving average, with resistance now standing at 24.63. The fast stochastic is suggesting an overbought position, while the MACD is suggesting higher prices. There are now numerous support and resistance points, some psychological and others technical, but much really depends on the Fed's announcement on Wednesday, or the anticipation of that announcement, when even these resistance and support points are likely to be breached in either direction. With US inflation running at or around 7%, and the Fed having declared its medium to long-term target of 2% inflation, it really does have to do something to persuade markets it has both the tools and the will to achieve this. At the same time, with equity markets more prone to interest rate rises than precious metals, if Jerome Powell is too hawkish, this could have a severe effect on equities. And if he's too dovish, the dollar will likely fall, and we shall see some significant rises in precious metals. It's a balance we're not certain that can be achieved, quite frankly. But for sure the FOMC and the Fed will try. This makes next week's prediction for precious metals extremely difficult, even without the prospect of Russia advancing on the Ukraine, which many geopolitical analysts are predicting. With this in mind, our best normal trading calculations have gold trading between $1,800 and $1,880 and $1,775 to $1,900 as outliers. We see silver trading between $23.75 to $24.80, but more than likely remaining within that 24 bracket, and 23 to the downside and 25.25 to the upside as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. And we shall no doubt be talking about the Fed tomorrow. Meanwhile, we wish you a safe, enjoyable weekend. And of course, as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.